after slightly weaker than expected revenue guidance. The company also announcing the upcoming departure of co-CEO Brett Taylor. For instant reaction to those results, let's bring in star Wedbush analyst Dan Ives here on set. It's good to see you. You sat down and said, and I quote, Brett Taylor leaving is a shock. You think that's what this stock move is about?
I think stock's down because he's leaving. Because ultimately, I mean, when he came in, even as co-CEO, it was viewed strategically was really going to be a big piece. Obviously, Benioff continues to be there. You look at M&A, that Slack deal, that was a big part in terms of, Brett. And I think that's really why the stock's down. I think if you look at fundamentals and overall billings and what we saw, I think overall better than feared. I think it's really Brett leaving that's a shock to the system.
I obviously give Mr. Taylor a tremendous amount of respect, but a 6%, 6.5% decline because the co-CEO is leaving? I mean, it's not like Benioff's leaving.
Look, in my view, Benioff's the reason that Salesforce continues to be that sort of stalwart. I think overall it's a knee-jerk reaction. If I look at overall billings, revenue, and even when you take out FX, I still view it better than feared. And when you compare it to, let's say, CrowdStrike and some of the other numbers we saw, I think it will be a relief. But I think when you look at Brett leaving, I think there would be questions about M&A. What's the M&A strategy going forward? There's obviously a lot of activism potentially in Salesforce. What does that mean about margins? Those would be questions in the call.
Would you want them to do more M&A in this environment?
Well, for us, we want to see two things. I'd want to see them continue to expand margins. I think ultimately that's really been lackluster since the Slack deal. But from an M&A perspective, I believe it's the time for them to get more acquisitive. Same thing, that's my view on Microsoft as well as Oracle, because now will be the time they could further bulk up their product wings.
What about an expected lag, let's say, in closing deals? Just as the environment deteriorates as it's expected to do, isn't that almost a formality?
Yeah, but I think we're seeing that. We're seeing elongated sales cycles, obviously extreme, what we saw in CrowdStrike yesterday. But I do think cloud is holding up better than expected in terms of this environment. Now, if you look, of course, off quarters, everyone looks at Salesforce as the key barometer. Scott, I believe the way this is going to be digested is that things are holding up, at least from a cloud perspective, better than feared. But for Salesforce now, it's about, what about that company in Redmond? Because obviously competition more and more, that's becoming a UFC battle between Microsoft and Salesforce.
Does the crowd quarter give you pause at all on Palo Alto, which you have sat in that exact seat and called a table pounder on this show? And granted, Palo Alto is down on the year, but it's not down nearly as much as some of the other players in that space are. But how does that impact your thinking on that one?
I view Palo as a double table pounder because of what we saw in CrowdStrike, because I think it shows share gains more and more from an install-based perspective. It's what Palo Alto's been doing. We just had a phenomenal quarter. And I think in cybersecurity, you're going to have winners and losers. I think obviously got over their skis in terms of CrowdStrike. But I look at names like Palo Alto, Checkpoint, Tenable, CyberArk. Those continue to be names that stick out here.
Hey, what about Apple before I let you go? There's obviously a lot of concern about what supply is going to be, how dramatically it's going to be hit. Some suggest 15 to 20 million units less than otherwise anticipated prior. The stock was, looking like it was heading back to a pretty key technical level, maybe have a 130 something to it. Obviously gets a big rally today. How should we be thinking about that now?
Well, look, it's a train wreck in terms of what we're seeing in the supply chain. We've talked about it. I mean, clock struck midnight finally for Apple in terms of what we saw in China. I think it took everyone by surprise. But I do think investors are looking at the demand. Right now, demand is potentially 4-to-1 over supply. That's why it's a demand thesis in terms of iPhone. That continues to hold in. That's why I view it as more moving from the December quarter to March, rather than that demand is essentially lost. But no doubt, this is a wake-up call, potentially the straw that broke the camel's back for Apple in terms of the China growth.